Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one idea at a time. Today we're looking at an expert advisor called Range Breakout Momentum. As the name suggests, it blends two classic concepts, price breaking out of a range, and momentum measured with the Relative Strength Index, or RSI. Over the next few minutes, you'll learn exactly how it defines a range, how it confirms a breakout, and how it manages its exits. Remember, this is educational information only and not financial advice, so let's dig in. So what exactly does this expert advisor do? At its heart, Range Breakout Momentum is a trend-following approach. It watches the market for a meaningful breakout from a defined trading range, and it only acts when momentum agrees with that breakout. The idea behind it is simple but thoughtful. Many breakouts fail because price simply pokes past a level without any real conviction behind it, and then snaps right back. This strategy tries to screen those weak moves out by demanding a second form of agreement before it commits. The range itself is built from a rolling shelf of support and resistance. By default, the EA looks back over the previous 20 completed bars and records the highest high and the lowest low across that window. That upper edge becomes resistance, and the lower edge becomes support. For a breakout to count, the most recently closed bar has to close beyond that shelf by a small buffer, and that buffer is scaled to the average true range, or ATR, so it adapts to how volatile the market currently is. The momentum side of the equation is handled by the Relative Strength Index, with a default period of 14. Rather than using the usual overbought and oversold idea, this strategy measures RSI around its 50 midline. A reading clearly above 50 suggests buyers are in control, while a reading clearly below 50 suggests sellers are. Only when the breakout and the momentum reading point the same way does the EA consider opening a position. This kind of system tends to appeal to traders who are studying trend following and breakout behavior, and who prefer a rules-based, mechanical approach over discretionary decisions. As always, trading carries risk, and losing trades are a normal part of any strategy. Nothing here is a promise of returns. It is educational information to help you understand how the logic is built. Let's walk through the logic step by step. First, timing. The EA only evaluates its rules once per completed bar. When a new bar opens, it knows the previous bar has just closed, and that freshly closed bar is the one it studies. This avoids reacting to every flicker inside an unfinished candle. Next, it builds the range. The strategy scans the bars immediately preceding the just closed bar, 20 of them by default, and finds the highest high and the lowest low. Those two values form the resistance and support shelf. Then it calculates two indicators on that closed bar, the Relative Strength Index and the average true range. ATR gives it a live read on volatility, which it uses both for the breakout buffer and for sizing the stop and target. Now the entry conditions. For a long, two things must be true at the same time. The closed bar must finish above resistance plus the buffer, and that buffer equals the breakout buffer setting, default 1/10, multiplied by ATR. On top of that, RSI must be at or above 50 plus the momentum band. With the default band of 8, that means RSI at or above 58. For a short, the mirror applies. The bar closes below support minus the buffer, and RSI sits at or below 42. When a long signal appears, the EA buys at the ask. It places the stop loss 1.5 ATRs below the entry, and the take profit 2.5 ATRs above it. That gives a reward-to-risk ratio of roughly 1 2/3 to 1. A short mirrors this, selling at the bid with the stop above and the target below. Finally, the exit management. While a position is open, the EA doesn't just wait passively for the stop or target. On every new bar, it checks RSI again. If you're long and RSI fades back below 50, or you're short and RSI climbs back above 50, the strategy reads that as momentum draining away, and it closes the position early. This active momentum fade exit is what screens out many of the low-quality breakouts. And importantly, it only ever holds one position at a time, so it never stacks trades on top of each other. Let's look at the actual MQL5 code running inside MetaTrader. At the top are the input parameters you can adjust in the Expert Advisor settings. RangeLookback, default 20, sets how many bars build the support and resistance shelf. RSI period and ATR period, both 14, control the two indicators. RsiMomBand, default 8, is the momentum band around 50. Break buffer ATR is the breakout buffer in ATRs, and ATR-SL and ATR-TpMult, 1.5 and 2.5, scale the stop loss and take profit. Lot sets the fixed trade size. Just below, the code computes long trig as 50 plus the momentum band, and short trig as 50 minus it. Those are the two RSI thresholds. Now the buy block. The Boolean long setup is true when the breakout bar's close is greater than resistance plus the buffer, and RSI is at or above the long threshold. When that holds, the EA reads the ask price, sets the stop loss at the entry minus ATR times the stop multiplier, sets the take profit at the entry plus ATR times the take profit multiplier, and calls trade.buy. The sell block is the mirror image. Short setup is true when the close is below support minus the buffer, and RSI is at or below the short threshold. The EA reads the bid, places the stop loss above the entry and the take profit below it, and calls trade.sell. Notice both sides use the same ATR scaled distances, so the trade geometry stays consistent whichever way the market breaks. That's the entire decision in just a few lines. Let's bring it all together on this illustration. On the main panel, you can see price action with two dashed reference lines, resistance up at 1.0860 and support down at 1.0850 from a later range. Below the candles is the RSI subpanel with the midline at 50, an upper band at 58, and a lower band at 42. Look at the first few candles on the left. Price is drifting sideways in a tight range, with the highs repeatedly stalling near the resistance line and the lows holding around support. Notice the RSI down below. It's hovering right around the 50 midline, ticking just above and just below. Neither buyers nor sellers have taken control yet, so the strategy simply waits. There's no breakout and no momentum agreement, so it does nothing. Then watch the breakout candle. Price surges, and this bar closes firmly above the resistance line, clearing it by more than the ATR buffer. At the very same moment, look at the RSI. It jumps up and crosses above the 58 band. Now both conditions agree, a genuine breakout and momentum confirming the same direction. That's where the buy entry marker appears. The EA buys at the ask and immediately sets its protective stop 1.5 ATRs below, with the take profit target 2.5 ATRs above. Follow the next two candles. Price keeps pressing higher, the bars stack upward, and RSI stays elevated, well above the midline. The move has conviction behind it. Price then reaches the take profit marker, and the long trade is closed at its target in this example. Notice what RSI does just after. It rolls over and slips back beneath 50. Had the target not been reached first, that fade back through the midline is exactly where the active exit would have stepped in and closed the trade. Now the market changes character. Over the next several candles, price pulls back down from the highs and begins coiling into a new, lower range. The strategy rebuilds its shelf here, and the support line at 1.0850 marks the floor of this fresh range. Watch the RSI through this stretch. It drifts below 50 but stays above the 42 band. There's a downward lean, but not yet enough momentum to act, so the EA holds back and keeps waiting for agreement. Then comes the breakdown candle. Price drops, and this bar closes clearly below the support line, beyond the buffer. Down in the subpanel, RSI falls and crosses below the 42 band at the same time. Once again, both pieces line up, a downside breakout with momentum confirming to the downside. That's where the sell entry marker appears. The EA sells at the bid, places its stop 1.5 ATRs above the entry, and sets the take profit 2.5 ATRs below. Watch the move unfold. The following candles push lower, each one making a fresh low, while RSI stays pinned beneath the midline, showing sellers remain in control. Price then reaches the lower take profit marker, and the short trade is closed in this example. Step back and notice the symmetry. In both directions, the recipe was identical. A clean close beyond the shelf by an ATR-scaled buffer, plus RSI, clearing its momentum band in the same direction. The stop and target were always sized from ATR, keeping the reward to risk near that 1 2/3 to 1 shape, and the momentum fade rule stood ready to exit early if the move lost steam. Of course, not every breakout behaves this cleanly. Real markets produce false breaks and losing trades too, which is precisely why the strategy demands that second layer of momentum confirmation before it ever commits. So that's a complete walkthrough of the Range Breakout Momentum Expert Advisor. We covered how it builds a rolling support and resistance shelf, how it confirms a breakout using an ATR-scaled buffer, how it uses RSI around the 50 midline to confirm momentum, and how it manages exits with ATR-based stops and targets plus an active momentum fade rule. Everything we discussed today is educational information only, and nothing in this video is financial advice or a recommendation to trade. If you found this breakdown helpful, please give it a like, leave a comment with any strategy you'd like us to analyze next, and subscribe so you don't miss future videos. You can find more MT5 strategy analyses over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.